Peter Rose, Longwood Currency Trading, 1st of July in 2021. And the topic is connecting Forex trade entry with trade exit. Sort of a holistic view, looking at trading. You know, I look at all aspects of trading holistically as I look at all of the process of life. I spent 50 years in the martial arts learning and teaching this stuff. And I see the interconnectedness of everything. And I look for that interconnectedness in nature as well as everything that I do. I mean, I had a physics background, spent a 33-year career as a senior software engineer doing business applications development for internet web-based stuff, and 40 years as a real estate investor. So those are all things that require you to look ahead as opposed to just doing individual steps without any cohesion, we would call it in software engineering, cohesion to it. Because of the unique nature of the Forex market, your trading plan, or at least the way that you view your trading process, has to specifically address how to correlate efficiently trade entry with trade exit. It's just not quite as easy as identifying a profit target and then putting your position on it. It's not easy. It's simple once you get the little recipe in your head. Speaking of recipes, isn't that how you would cook something? You wouldn't just, oh, I got a meatloaf recipe here and I'm going to cook this, and you look at the first line, it says brown the ground beef, and no, you do two preliminary steps. One is you review the entire ingredient list and make sure all those ingredients are on the table before you start. And the second thing you do is you read through the entire recipe to get a grip on the scope of work that you're going to be required to do. How many different steps? Are there steps that are overlapping? Are there steps that need to take precedence over other steps? How long is each step going to take? In business project planning, we call this building basically a PERT diagram, where you have your happy path, which is everything goes right, this is the way it goes, and then you have your not so happy path, which is everything goes wrong, and then a bunch of paths in between, which are probable paths, and then you pick the most likely of those, certainly not the happy path and certainly not the worst case, in order to plan your project. And so too, we do that in travel. We do. I don't know what the hell you do, but this is what you need to do. Is that your trading plan, which forms the basis of how you're going to approach placing trades, should have that cohesion to it. If you're not experienced in project planning, then your trading plan is pretty plain vanilla. And you know, in the course, one of the courses that I wrote and developed, I give a sample trading plan, and it is very plain vanilla. It's just, you know, these are the main things that you need to do in this particular order. Selecting your broker, what's your bank size, how big's your lot size going to be, you know, that kind of thing. Those are the things that go into that trading plan. Which currency pair you're going to trade, what time frame, you know, all that sort of stuff. But it doesn't present a cohesive thing. I mean, I think the cohesion is our responsibility as people in order to take the information and then make it cohesive in our minds. I mean, if you're going to go down to the grocery store, there's a certain number of steps that you need to go through that are fairly straightforward. But if you're not looking at where you're trying to go with the car, and you're just following those steps, go out to the car, open the door, stick the key in, jump in the car, turn the key on, back up, pull out of the driveway. If you haven't looked at that end point, I'm going to go to the grocery store, which might really be, I'm going to take a 300-mile trip. Well, one of the things on that to-do list, check your tires, check your oil, check your gas, check your wiper fluid. You wouldn't necessarily need to do any of that if you're going to go to the grocery store, because you'd have your life experience to say, well, I filled up at the gas station last week and I've only gone a little bit, so I've got plenty of gas in there to go that distance. But you get the process here. Anything that we do, you have to have a look forward as to where you're trying to get to in order to have that plan be cohesive. Getting there is the end result, but it isn't necessarily part of the what or how of that trade process that you're going to go through, and to a certain degree not even when. Those are the mechanical aspects of putting the trade on and managing it as it's going. But you can't just say, well, I got a profit target of 20 pips or 200 pips or whatever it is, and then start doing your shit. I did a video not long ago on chess opening theory as it applies to Forex trade entry. You might want to take a look at that video because it's pretty interesting. In it, I mentioned, and I did a blog post on that as well, but in it I mentioned a book by Jose Capablanca, who was a world champion chess player, and he tremendous chess player and tremendous writer, educator. And he wrote a book called Last Lectures. And if you know anything about chess, you have all these pieces and they're weighted in their value. A pawn doesn't have anywhere near as much value as a bishop, and a bishop doesn't have as much value as a rook. So what Capablanca did when he teaches chess is he starts with the two kings and a couple of pawns and a bishop. Each of you have your king, a couple of pawns, and a bishop. Because what are you supposed to do? You're supposed to checkmate the king. And so by learning how to move the pawns and how to move the bishop with the goal of checkmating the king is far superior than trying to learn the Roy Lopez opening, which is pawn to king 4 and knight to queen bishop 3 and bring the bishop out to knight 4, whatever it is, whatever that Roy Lopez opening is, because that doesn't mean anything. It doesn't mean anything if you don't know what you're trying to do. There's no point in putting the position on if all you think you're going to do is make money. That's not the goal as far as the trading plan goes. Obviously, you don't trade if you want to make money. Well, you have to look at that holistically. How does making money under these current price action and structural situations become possible? How does that become viable? What pieces of the puzzle that you're working with are you going to need to fit together in order for that most likely path, project management path, occur? How can you facilitate that? You can't facilitate it if you don't know where you're trying to go, you see. And too often people think where they're trying to go is they're trying to get 20 pips. Well, what happens if price doesn't want to give you 20 pips? What if it gives you 10? What are you going to do? If you're fixated on the 20 pips or the profit target or whatever it is, you're not going to be flexible. You're not, because you don't understand what you're trying to do. And getting 20 pips or winning money or having a successful trade, those are goals. But the goals to what? The goals to the trading plan. You have a disconnect between your entry and your exit. How do you form that? How do you broach that issue in your mind, if not on paper, if you have a technical background and you could do a trading plan with it? And I've seen people to do trading plans like that, and I even tried to do it. It becomes an absolute spaghetti spider nightmare of if-then-else conditional crap, and pretty soon you've written an epistle on trading, and it's so specific that you can't follow it. You know, if you've watched any of Al Brooks' videos or read any of his books, and I've read several, and I've watched many of his videos, he does that approach. He's very analytical and anal in his observations of price action. Well, you see, we've got this 3-bar pattern here, and normally what would happen is we do blah, 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 but because the 5th bar back is doing this, and it's Tuesday, you might want to consider going short here instead of long, okay? So there's a PERT diagram nailed right on down, but it's you're going to have to build another PERT diagram if there were another option. What happened if such and such back here didn't occur, then what ramification would that have on this piece out here? So you can't be too specific. When we're writing, as a software engineer, when I'm writing business applications, you would write the least amount of code to achieve that one specific goal. So if I was going to want to register a new employee, I'd create an employee object, and I'd create an object to control the employee, and I'd say, new object, control object, create this employee, and send him out to some other object that knows how to register him. And I got to create that registration object. And then I check it and make sure that when I make the employee object and I put it in the method that sends it off to this object, that it gets there by sending me a print statement that says, I am the employee, I got the registration object. Okay, now what are you going to do with it? Well, you need to create a database with a table that has the employee first name in it. That's all. Because that's the only thing you put in your employee object is his first name, Bob. When you get Bob to the registration object opens the database and puts Bob in as the first record in that database, sends a message back to the registration office. We got Bob registered. The registration object sends it back to the control object, says, hey, we're cool, we got Bob registered. That's the simplest thing that you can do. Now, anywhere along there, you can add as many components to the employee object as you want. You can create as many other objects to deal with those different components as you want. You can deal with other different business issues before you get to that registration object. Let's say you don't want to register anybody in your company that lives in Chicago. You know, you just don't want Chicago people. You don't like them. Well, you create an object that's limit employee registration from Chicago. And there's a rule in there that says, oh, you're from Chicago. Bob's from Chicago. Send a message back. Said Bob isn't going to get in. And you incrementally build toward that. But what's the end point? The end point is getting this stuff into the database. And you've succeeded in doing that by creating that database when you need it, as you went through. And now I have a completely malleable system, what we call in software engineering extensible. I can extend that business process to include any amount of logic that I want to, as long as I'm registering an employee. If all of a sudden I want that employee to be able to register with the softball league, that's totally out of the scope of what my task as a software engineer was doing. I don't build in anything in that employee object that says what sports they're good at, because that's not part of my job. That's somebody else's problem when they come along later. But it should be very easy for them to add a sport expertise component to the employee object and a database record or a database element in the employee record that is for sports management. Your trading has to be the same way. And that's that holistic view of the trade, or what you really should be calling the position. The trade is what you do. The position is what you have. And it's what you do with what you have that's really more important than anything else, yeah? Okay. So that's the methodology of correlating your entry process with that of your exit process. It's a little more complex than that. You know, you kind of get lost in the weeds a little bit with discussing that kind of thing, but I think you get the thrust of it enough in order to change the way that you think about your, not only your trading plan, but also the process that you go through when you sit down and pop the chart up and look at it. You can't just look at, is this a good place to enter, and is this a good profit target? You got to figure out how you and your particular personality can tie all that stuff together. Look, if you have the personality like I do, which is, I got a short-term memory, but I'm impatient and I want action. That's why I'm a day trader. I want to get in, I want to make the thing happen, I want to know whether I got a mistake and get out, or I've got a trade that's going to work and I can get out with a profit and I can be flat at the end of the day, so I can go watch a movie and have a glass of wine and not have to worry about anything. That's my personality. So if you're going in there with a long-term investment mentality where you'd be better suited trading off of the daily charts, for example, and you're looking at trading down on the 5-minute chart, you can't even tie that shit together. And as soon as you try to build that relationship down on that 5-minute chart, your roids are going to shrink up and you're going to go, whoa, man, I don't belong down here. This feels uncomfortable. And when you pop it up to the daily chart, all of a sudden you relax. I get the same way when I try to make a long-term trade. And when I do make a long-term trade, I end up losing thousands and thousands and thousands of dollars because I can't form that correlation. I'm not that patient. It's just not in my DNA to think in terms of, in the currency markets. I mean, look, I owned real estate properties for 20, 30 years. I understand what a long-term trade is. Trust me on that. But I just get really, I don't feel I have any control over my risk in a long-term trade environment in the Forex market. Yes, I can get out at any time, but if you're sitting with a carry trade, what are you going to do? Are you going to be up at 3 o'clock in the morning or something like that, managing your carry trade so that if it retracts a certain ATR amount that's more inconsistent with the current structure of price at that particular time, that you probably want to exit with the greatest amount of profit that you could, man, that just makes me crazy. You can't put a trailing stop on. The fucking trailing stop has nothing to do with what the price potential has if you just leave it the fuck alone. So that's my opinion. So that's the type of self-analysis that you have to do applied to every individual position you're considering trading. Peter Rose, Longwood Currency Trading. Have a great day. Have a great trading day.